Hello, everyone. Welcome to week one of Business in Society. I'm going to talk a little bit about business ownership structures. So one of the first things that you have to do when you want to start a business is to choose an organizational type. And there are typically four business organizational options. These are sole proprietorship, partnership, corporation, or a hybrid. The hybrids are relatively new, and each type of business is going to have its own set of risk and rewards and different costs that are going to go into setting up the business and benefits to the type of business organization that is chosen. So picking the best type, it depends on what type of business you want to run and the level of personal exposure to risk that you're willing to accept. So some considerations in choosing an organizational type. One would be the cost of startup, control, how much control you have over the business versus how much responsibility you have in the business. Do you want to share the profits with other people that might be contributing? Taxation, that's a big one because businesses are taxed at the federal level. And then entrepreneurial ability, your risk tolerance. If you're putting in your own money, how much risk are you willing to lose that money? What about financing? Are you able to get financing? Do you have good credit? Are you able to get a loan from the bank? And then continuity and transferability. So with corporations, they continue indefinitely because they have shareholders. And so if one shareholder passes away, the business continues. Their shares are just inherited by their relatives. And then also with corporations, you can sell your shares. If you no longer want to be in the business, you can transfer it to someone else. That is not necessarily true with sole proprietorships. It's not quite as easy if you're a single person, one person running a business. If you pass away, the business is not necessarily going to continue. So sole proprietorships, these are owned and run by one person, and they're the simplest and most common legal structure for a business. Most people, when they start their business, they are a sole proprietorship, and then they may incorporate later. So some advantages is it's easy and very inexpensive to form. The single owner has complete control over all the decisions, and the tax preparation is fairly easy. Sole proprietorships are going to file a Schedule C. Some disadvantages is that there is unlimited personal liability for the sole proprietor. It can be difficult to raise money. Single owners, they take on all the responsibility for the business and the operations and the finances. Partnerships is another option, and this is when two or more people share ownership and responsibility. And there are two types of partnerships. There's general partnership and limited partnerships, and we also call these limited liability partnerships. Some advantages, they are easy and inexpensive to form. They have a shared financial commitment among the partners, and they can utilize the expertise of each partner. So typically, each partner is going to bring something to the business that's of value. And then the partnership incentives, opportunities for employees. Some disadvantages of partnerships: the partners retain full liability for the business, so they can be sued and their personal assets can be taken. And then often you can have disagreements among partners. That's an issue a lot of times. And the profits are shared among the partners. So you can have one or more partners, but the profits would be split among everyone. And then we have corporations, and this is the majority of revenue from business in the United States. They are the most complex type of organization to start and to maintain. And they are not the most common form of business ownerships. And there are three types of corporations: a C corporation, an S corporation, and a B corporation. So C corporations, these are independent legal entities. They're owned by shareholders, and they pay income tax on their profits. Dividends appear on the shareholders' personal tax returns, and they are subject to taxation. So dividends are paid to the shareholders, and then the shareholders pay tax on those dividends. The income is distributed as a salary or other compensation, and it would be deducted from the corporation. So if you worked for the corporation in addition to being an owner, the income would be distributed as salary and other compensation, and it's deducted from the profit of the corporation. Some advantages: it provides shareholders with limited liability for debts and actions, and they're able to generate capital through the sale of stocks. The profits outside of salary, bonuses, and dividends are often taxed at a lower rate than personal taxes. And they're attractive to potential employees due to the ability to provide employee benefits and stock options. Some disadvantages of corporations: they're time-consuming and costly to start, and they're taxed twice. So when the company makes a profit, they are taxed, and then when the dividends are paid to the shareholders, they're taxed. And so there's additional paperwork and record keeping that's required by state and federal governments. So this is an additional burden on the C corporations. And then we have S corporations. This is a special type of corporation. It's created through IRS tax election. So what typically happens is you file with your state and file your incorporation paperwork with your state, and then you request with the IRS through a specific form, you request to be treated as an S corporation for tax purposes. The profit and losses can be passed to your personal tax return, and the business is not taxed. They don't pay tax on their profit, but the shareholders are taxed. So that profit gets passed to the shareholders, it goes on their personal tax return, and they're taxed on that profit. Some advantages: there's a tax savings, so you eliminate the double taxation. There are business expense tax credits that can be taken so that you're not paying tax on everything. And then there's clear lines of definition between the shareholders and the business that improve the protection of the shareholders. So it's less likely that the shareholder could be sued. And then some disadvantages: they have stricter operational processes, and there are shareholder compensation requirements. And then we have benefit B corporations. These are a type of for-profit corporate entity. They're authorized by 30 U.S. states and the District of Columbia. And that includes positive impact on society, workers, the community, and the environment. And they differ from traditional C corporations in purpose, accountability, and transparency, but not in taxation. So some advantages of B corporation: they give companies more options and protections if they decide to sell the business to someone else or take it public. It allows companies to stand out as businesses with a standard they consider higher than maximizing profit for shareholders, and it may create value via employee engagement and customer loyalty. And some disadvantages of B corporation are transparency and reporting requirements, annual fees to retain the certified B corporation status, and compliance and governance obligations. So that's a rundown of the different types of organizational structures that one can decide to use if they want to start a business. So my mission for you, if you should choose to accept it, is to investigate the state you're in. Every state has a website. I say every state. I don't know that everyone, but I'm going to say every one of them has a website. It's usually called the Division of Corporations. And in Florida, where I'm from, it's sunbiz, B-I-Z, sunbiz.org, sunbiz.org. And that's where you go if you want to start a business, if you want to incorporate. And every state has this. So remember, you incorporate at the state level, and then you file a form with the IRS if you want to be treated as an S Corp or some other form of partnership, however you want to do it. So you get permission from the IRS for your taxation, but you file your incorporation paperwork with the state. And so most states, I'm going to say all, have a website where you go to do this. And so what I would like everyone to do is just take a little time and do a Google search and investigate your state's website. So you would just put in the name of your state, and then typically if you type in Division of Corporations, that will get you where you need to go. Okay, and so just investigate. What does it cost to incorporate? What does it cost for an S Corp? What does it cost if you want to incorporate and become a nonprofit? What about sole proprietorship? Is there any incorporation paperwork, or it wouldn't be called incorporation paperwork, or is there any paperwork you would need to file if you want to be a sole proprietor? Typically there is not at the state level. However, there may be some business licenses that you would have to have at the local level. But that's what I'd like everyone to do, is just take a moment, 20 minutes or so, and investigate your state's website and learn a little bit about it, and then let the class know what you found out. I hope you enjoyed the video. I hope you enjoy the class, and I will see you in the discussion.